Good afternoon, everyone. For those that are on the call, I understand we have just a little over 100 on today's webinar. I want to introduce myself. I'm Joe Perpiglia. I'm President and CEO of Associated Builders and Contractors in Eastern PA. Very happy to have all of you on. I think there's a bit of an exhale of a sigh of relief. We now have a date that construction will resume. It's something we can put on the calendar and start to prepare for. We here at ABC have already been in the midst of doing that within the last week, and we hope to return to normal operations sometime in the middle of May. When I say normal, maybe having a few people actually come in and we can see your faces, not on a webcam. We can actually see you. So very happy, though, that everybody could make this today. We do have some serious issues to discuss, which I have a panel of our members on board here today, and I'll just briefly introduce them, and then we can get started. So for housekeeping, if you have any questions, there is a spot in the chat bar if you'd like to send any questions our way. I appreciate we've already gotten a list of about 15 I'm looking at here before we got started. So appreciate that. And with that, I wanted to make sure that you knew who was with us. So from Milestone Financial, I have David Coult, who is a member. He's also the chair of our Lehigh Valley Council. He's been a longstanding member with ABC Eastern. Appreciate him being on today. We have Mark Guillaume from Kreischer Miller, who is the chapter's treasurer, also part of our board of directors, and as I mentioned, from Kreischer Miller. We have John Landesman, who is the chapter's legal attorney and gives us our labor consultations from Cohen Seglias, and we appreciate him being on. We have Hoyt Emmons from Med-Tex Services, member who Med-Tex has been really helping us out in Philadelphia as we've expanded our operations into Philadelphia and started up our Philadelphia Council. So we appreciate Med-Tex being a part of this. And last but not least, of course, Tammi, who is the chapter chair this year. She is Director of Administrative Services at Clover Contracting, and again, is our 2020 board chair. So as I mentioned, if you have questions as we get started, you'll have a chance to put those into the chat box. We have some, as I mentioned, were already sent, so we'll try to get to as many of those as we can. Today's session is being recorded, so if for some reason you need to revisit this, you'll be able to. And if there's any questions that happen to stump the panel, which I doubt, but if they do, we will make sure that we follow up with all attendees with all Q&A. So with that, I'd like to introduce officially now David Coult from Milestone Financial Associates. He's been someone who's been really pushing how happy we are to get back to business here, or at least have a date on the calendar. I thank all the members for staying positive through this situation. I said at the beginning we'd make it through. We did. And with that, David, I'm going to hand it over to you.
Thanks so much, Joe. It's a pleasure to be on the call today. Again, my role is just to provide some economic perspective, just bring you up to date on what's been going on, and as well as looking ahead with providing some financial ideas that you could potentially implement in your business as well. So again, my name is Dave Coult. I'm president of Milestone Financial Associates, a retirement and financial planning firm specializing in the construction industry. So let's jump in. First, the bad news. In about 2 month time period, we've seen unprecedented events. Never in our lifetime have we seen the economy go from strong expansion, where our biggest challenge was finding skilled workers, to an unemployment rate that's estimated to be the highest since the Great Depression. We've seen over 1 million COVID-19 cases in the U.S., over 56,000 deaths. Globally, over 3 million cases and over 200,000 deaths. Consumer spending, which makes up about 70% of the U.S. economy, has dropped about 25% year over year, and consumer sentiment has declined pretty significantly from its peak in late 2019 to levels that we've last seen in May of 2014. The S&P 500 index of the largest 500 publicly traded companies in the U.S. saw its value drop from February 19th to March 23rd, dropped by about a third, 34% decline in market value. And small publicly traded companies, still large companies relatively speaking, but small relative to the 500 largest, saw their values drop 43%. Obviously, airlines, hotels, restaurant stocks have been hit hard. Financials, industrials, and energy companies are down big. We've seen future contracts with the demand for oil dropping off substantially. Futures contracts on taking delivery of crude oil are down 80% year to date. Healthcare stocks, technology, and consumer staples are about flat for the year, and gold is up 13%. Who would have thought at this point that a case of toilet paper would be worth more than a barrel of oil? The Federal Reserve has stepped in and taken rapid action. The central banking system in the U.S. cut the short-term interest rate to zero and have been buying bonds like crazy to keep credit markets operational so that businesses can continue to borrow and function. And the interest rate on the 10-year government bond, the Treasury note, has dropped 67% to 0.62% currently. The federal government has passed massive bills to pump trillions of dollars into the U.S. economy, most notably the Coronavirus Aid, Relief, and Economic Security Act, the CARES Act, and many small businesses are applying for Paycheck Protection Program loans, and there's great frustration among many. Some have been funded, many have not, and so there's a lot of frustration surrounding that. And much of the economy has been closed and is just now starting to reopen, as we all know. So where are we headed? I mean, that's the bad news, but where are we headed looking forward? Well, we see that there is a lot of optimism out there. Large publicly traded companies have seen their values recover, gained about 55% of their losses back, and small companies have gained back about 40% of their losses. So the stock market, which is looking forward and trying to estimate future earnings, is pretty optimistic. Publicly traded companies are now reporting their first quarter earnings from January to March of this year, and we've seen normally when they do that, they publish guidance of what they expect their year ahead to look like, what they expect their revenues to be, their expenses, and their profitability to be. And 80% of companies have withdrawn their guidance, basically saying we have no idea where we're going to be for the year. So a tremendous amount of economic uncertainty around that. We hear economists, many are predicting a V-shaped recovery. We're going to bounce right back and get back to work and things will be off to the races again. We also, though, see economists that are predicting it's going to take a long time. So we see economists predicting massive inflation and economists predicting massive deflation and really everywhere in between. Healthcare experts, some are very optimistic about the development of treatments and vaccines. Others are a little more cautious, a little more measured. So uncertainty is really a key thing that we have to deal with in the current environment. Each month I publish a construction market guide where we look at labor costs, we look at materials prices and input costs into construction, and to help business leaders make good decisions. So check that out each month on our website at Milestone FA, like financialassociates.com. On the videos tab, we update that monthly. You can sign up to get that if you'd like. And so there's a lot of information available there. In terms of other financial news, I'll go through a few things that have happened. We saw prior to the coronavirus coming in, the Secure Act changed the age at which people who have retirement accounts are required to take distributions. Essentially with the retirement accounts, IRAs, 401ks, the IRS allows us to defer paying income tax on a portion of our earnings, but they eventually want us to pay those taxes. So they delay that until retirement. And they say for people that haven't withdrawn it by age 70 and a half, they don't want you to die without paying taxes. So they make you start taking the required minimum distributions out of your retirement accounts. And they changed the age of that from 70 and a half to 72. The CARES Act modified that even further and said that nobody's required to take a required minimum distribution this year. So that's not required. You don't want people to have to sell stock and other investments when they're down to make withdrawals at this point. So the CARES Act also has made additional funds available to people by saying for those affected by COVID-19, you can take a withdrawal out of your IRA and of up to $100,000. And then you'll have a 3-year period to either repay that money back into your IRA or to pay the taxes over a 3-year period, but no penalty for those that are under 59 and a half. So that is a source of capital that people may have access to. They also changed the rules around 401ks. So for plans that amend their 401k that have loans, that allow loans in the plan, the loan features used to allow people to borrow up to 50% of their account value up to $50,000, and they've now made a provision to change that and raise the limit to $100,000. So for plans for those who are in charge of their company's 401k plans, that's a provision to consider whether you want to amend your plan to allow that higher limit. I also think it's a really important time to be communicating with employees that are participating in your company's 401k plan to make sure that people have the information that they need to make good decisions, or maybe more accurately to avoid making bad decisions in the current environment. It's also a good time to review the fees and expenses of your plan, make sure the investments are performing appropriately, and that the plan's doing what it's supposed to do. So other recommendations that we have for business owners right now, particular construction, I would say it's a good time to assess your current situation. Take a look at your pipeline of work that you have. Take a look at your staffing levels, look at your cash and financial position. Cash is king right now. And so if you haven't already, good time to talk with your accountant, your banker, your financial advisor, and consider PPP loan. I know Mark's going to be talking about that in a few minutes, but definitely something that is worth taking a look at and very important to guard your cash in the current environment. Some other things, if you expect your profits to be down this year, as most businesses do, it's a good time to consider recognizing some gains. So if you have stocks that have appreciated or mutual funds that have gone up in value over time, in a year where your income would be lower, you may be in a lower capital gains tax rate, and it may be a good time to sell some of those investments. You could reinvest that money. You have to reinvest in somewhat different investments, and so seek some advice on that to make sure that you're doing it correctly. But good time to definitely give that some thought. Also, it's an opportunity for people who have pre-tax retirement money, IRAs, 401k plans, to consider converting a portion of those accounts into a tax-free Roth IRA. So moving money from one pocket that they haven't paid taxes on, where they'll pay tax in the future, to pay the taxes today, presumably while the account value is lower, assuming your account value has dropped in your retirement investments, pay the taxes today when you're in a lower tax bracket and your account value is down, so that as that investment rebounds, you'll have a pool of assets that you can draw tax-free in the future in retirement. Obviously, depending on your particular financial situation, the amount of money we see the government spending right now, I think there's a high chance we could see tax rates increase in the future. So it's not necessarily always the right thing to delay taxes in every case. If they're going to be higher in the future, it might not be a bad time. Again, there's a ton of economic uncertainty out there, but I have never been more enthusiastic because ABC members are so well equipped at managing change. Every job you work on is unique. Every project is different. You deal with seasonality from the heat of the summer to the cold in the winter, from dry conditions to wet conditions, from managing cash flow, working in a recessionary environment to a growth environment, from attracting skilled labor and the shortage there to other times when things change. So construction executives are so good at managing change, and I think that's really what's called for in the current environment, to help your customers deal with the change that they're dealing with in the new economy that we're seeing. And finally, I'd say I'm optimistic about the future because ABC members are leaders, and leadership is desperately needed right now. It's incredibly important. A lot of people have been dragging around their house for a month and a half, and they're struggling. They need leadership to provide a safe path to get back to work, and to provide some motivation, some enthusiasm, and to get people fired up to go build stuff. And so where are they going to get that motivation? You. So I would encourage everybody to take a look at how you're feeling, take a gut check, and if you're not feeling the optimism that you might like to, play some AC/DC for those about to rock. We salute you. Don't play Highway to Hell. Stick with For Those About to Rock, because I really think that's the position we're in right now. And repeat after me. I feel happy. I feel healthy. I feel terrific. Say that 5 times every morning out loud, and let's go build the future of America. Thanks so much. Joe, back to you.
Dave, thanks a lot. Well, yes, I put out a LinkedIn post at one point. Yes, we did have For Those About to Rock blasting in the office before all this, and we plan on doing it very soon. So thank you for that. We do have some questions coming in. I think that they might be more apt for some of the upcoming speakers. One that probably straddles financial and then financial management. One that came in from Kurt Twifford. What are you hearing about the strings attached to forgiveness is the first part of the question. And he's hearing that payroll expenses may not be forgiven if you don't really, quote unquote, need the money. So I'll lead in, introduce again Mark Guillaume, director at Kreischer Miller and our treasurer for ABC Eastern. Mark, maybe that's a lead in for your presentation, or maybe you want to tackle that somewhere in the body of things.
Absolutely. Thanks for having me today, and hopefully, I'm going to cover a few different areas. Hopefully when I'm done, I will give you a little color. May raise some more questions and answers, unfortunately, based on where we stand today. But I will cover part of what that question was addressing in a little bit. So as Joe had mentioned, I'm a director at Kreischer Miller. I co-lead the construction practice at KM. So we're a public accounting firm based out of Horsham. I'm the lead attestation director for Kreischer Miller. So since all these programs have been coming out, obviously we've been spending a lot of time evaluating, looking at them. Our clients have a lot of questions. So I'll try to answer as much as I can. Originally when we scheduled this, I was hoping to be able to talk about the final forgiveness regulations that were coming out from the PPP. Unfortunately, our expectation was that they were going to be issued by April 26th, which was 30 days after the law went into effect. And we're sitting here a few days later than that, and we still haven't received final regulations. So, there's still a lot of uncertainty. Obviously, the CARES Act did put some, ideas of what they were looking for, but the SBA is now taking those, what the law says, and trying to implement it with the final regulations. So we'll keep you updated. I've been checking, probably at least 3 times a day in the past week, if not longer, trying to get on top of these forgiveness regulations when they came out. We're still not there. I'm not overly surprised that the forgiveness guidelines have been delayed. There's a lot of other things taking priority right now. The funding had ran out, so there was a lot of effort being put on putting funding back into the plan. Fortunately, we're there now, where $310 million was reallocated to the program last week, and they could start taking new applications as of yesterday. The other thing that the other thing that I think you're starting to hear news of different organizations that receive funding, and I think just trying to clarify who qualifies while people are still trying to apply is important, and the SBA has been focused, Treasury and SBA have been focused on that. So where we're at today, we have the general idea of where the guidelines from the CARES Act, what is said, and I will cover those in a little bit, and sort of some other things that we're hearing currently. So with the time that we have today, obviously the whole PPP and these other programs could be a webinar within themselves. But with kind of what I want to focus on today was the payroll protection program. The forgiveness elements of that is going to be the main focus of my conversation today. I also will cover the employee retention credit, which is another option for people that may not apply for the payroll protection program or don't qualify. And then there's the employer payroll tax deferral that I wanted to talk about. In addition, as we do get going back to work, and obviously some jobs were still going on, as an accountant, looking at project costs, I do want to just cover briefly, in the current environment, making sure that project management is on the forefront of what all our contractors are doing in this unprecedented time. There are other programs and tax improvements that were, in the CARES Act and other acts. There's a lot of, I don't have time to cover all those in the webinar today. I'll cover it. I'll cover the stuff that I'm going to cover in a high level, but I would recommend, talk to your advisors, talk to your accountants, talk to your attorneys, talk to your financial advisors. I know Kreischer Miller, we have, and Cohen Seglias, we have our own COVID-19 resource center, as well as ABC has their own resource center that has a lot of useful information and recorded webinars on some of these different programs. So if you want more detail on some of these programs, you can obviously go there. and listen in, and then maybe reach out to your advisors for additional guidance for your specific situation, and go from there. I will start out, the views I share on here today are my own. I am not authoritative. I sometimes wish I was, but I'm not. The rules and guidance are continually changing, and I would suggest that you keep apprised of what's going on and what you're seeing, and research on your own, and use those resource centers, as I'd mentioned before, to keep on top of everything that has changed. So my plan was not to go through the PPP, the Payroll Protection Program itself. I think hopefully a lot of you have already applied and received your funds. For those that haven't, and you're planning on applying, I would suggest at least listen into the webinar, and then as soon as it's over, reach out to your advisors, reach out to your bank, and get the process started, because we already had one refunding of the plan, and I don't know if there's going to be another. So just work on getting that, get that completed, so that you have a chance of getting the funding before it runs out again. So some recent developments on the PPP. As I said before, $310 billion was funded to the program last week. They started accepting applications yesterday. One thing that I heard today is Treasury Secretary Mnuchin he noted that the government's going to be performing reviews of any loan that was given that was in excess of $2 million. They're going to do a specific review of those loans just to make sure that before they're forgiven, to make sure that people qualified and it was used for the right purposes. So that's some interesting developments, and a lot of, I think, comes down to you're hearing in the news certain organizations getting money. I heard yesterday, I think the Lakers had received some money, which that's negative publicity for them, and they want to try to control that and make it so that the funds are being used for what it was intended. The other thing that you may have heard about, last week, the Treasury and the SBA, Small Business Administration, they have a Q&A, an ongoing Q&A of guidance, of frequently asked questions that they provided to their, that they've issued. And the one last week was sort of related to the same thing that Secretary Mnuchin is talking about with the full loan reviews. Is the original guidance is per the PPP was you got to certify in good faith that the current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. So it wasn't too hard of a hurdle for companies to get over, but now with this new guidance, they've sort of changed the goal line a little bit, and they're saying borrowers must make the certification in good faith, taking into account their current business activity and their ability to access other sources of liquidity, and if they have access to that it's able to support the ongoing operations in a manner that it's not significantly detrimental to the business, then they really shouldn't be participating in the Payroll Protection Program loans. That is not very clear, the guidance that came out, but I think a lot of it is related to these public companies that receive the funding, and they just want to make sure that those type of companies return the money, and so it can be used for its intended consequences or intended purposes. So for those companies, they have the ability to return the money by May 7th of 2020, and if they do that, then they're it's going to be assumed that they made their certification in good faith. They won't have any penalties, and they'll move on without having the loan. So for people on the webinar today, what does that mean for you? I think obviously it raises some questions, right? Like, how much capital did you have? Would our business have been significantly impacted had we not received these funds? There's more questions and answers that it created, and we're hoping that there's more guidance in the next couple of days, because May 7th does give you a whole lot of time to make that decision of, should we really have received this money? I have a lot of clients that are already, they're already talking about it and discussing it internally, reaching out to their law firm, their advisors, talking to their bankers, to see what makes sense. Did I really qualify for this money? So keep tuned in for that. I wish I had an answer for you, but that is something that I think each company is going to have to make a determination on how, you know, how they've been impacted, and make sure that they're comfortable with what they've done. So getting into the payroll protection forgiveness, you know, if you do have questions on the program itself, feel free to put them in the question box, and Joe can ask them later. But because most everyone has put in their application already, I mean, I think that the main focus I wanted to talk about was the forgiveness piece. So the loan is available for forgiveness if certain costs incurred in the covered period. So the covered period begins on the date the funds are received from your financial institution. So if I were to receive the money today, any costs I incurred that were related to payroll and the applicable non-payroll cost, the loan could possibly be forgiven for those amounts. For the payroll cost, you know, they must represent 75% of the loan forgiveness amount in order to be able to receive 100% forgiveness. And then from you know, what's covered under the non-payroll cost, you know, it can be, you know, interest on mortgage obligations, any payments on any covered rent obligation, any covered utility payments such as electric, water, gas, telephone, transportation, and internet access. So, you know, that can be up to 25% and still be forgiven if you max out at the 75% of payroll costs. If you don't, then whatever your payroll costs end up being, you know, whatever 25% of that number is what you can be forgiven from these other non-payroll costs. When we talk about, you know, in the regulations itself, you know, there was also discussion of whether interest on other debt obligations besides mortgage obligations, if they counted. We don't have final guidance on that yet. You know, it could be, but the final regulation or the act didn't really address whether they were covered or not. And then from the utility perspective, you know, the one point was transportation. We really don't know what transportation means, whether it's fuel costs. So that's something we're waiting final guidance on as well. So the first thing you have to look at with the forgiveness part is really, I guess it's two parts. It's really figuring out what are your payroll, or what are the costs that apply. So, you know, your payroll costs, your wages, your health benefits that you're paying, your retirement benefits that you're paying, those are all considered allowable costs for forgiveness. So, you know, that's the first thing that you have to figure out, how much are those costs. And then also in addition to that, the non-payroll costs, you should be calculating those and figuring out what those totals are. And then, so that's going to be the first criteria to determine how much of my loan can be forgiven. So once you add up all your payroll costs and the non-payroll costs that apply, that's going to be the total amount that can be forgiven. Now, if you received $1 million PPP loan, and those costs only add up to 900,000, and you meet the 75-25% criteria, then your max loan forgiveness would be 900,000 in that circumstance. However, that may not be the amount that you actually receive, because there's other tests that you have to pass in order to get the full 900,000 forgiven. So the two tests are full-time equivalents, whether they were reduced during the covered period, and then also if you reduce salaries and wages for employees making less than 100,000, if you reduce those salaries and wages, you know, below 25% of what they were making before, then that would also result in a reduction in the amount of loan forgiveness. So the full-time equivalence test, you know, it really ends up being a ratio of the full-time equivalents during the covered period, during that 8-week period, and you have two choices. One is the average number of full-time equivalents from February 15th, 2019 to June 30th, 2019, or you can also use the period full-time equivalents from January 1st, 2020 to February 29th, 2020. So as a company, you have the option of picking what period you're going to compare your covered period to those periods. So obviously you're going to pick the one that's a lower full-time equivalent, to the smaller hurdle to get over. So that's something that I think we can start looking at now, is saying what period are we going to compare ourselves to, and then for whatever that ratio ends up being, it's going to be multiplied against the loan forgiveness the costs that it could apply for forgiveness, and it's just going to reduce that amount by that. For seasonal employers, there are special provisions. I'm not going to get into those, but it gives you different periods that you can use, a different period that you can use to determine your full-time equivalents to look against. The next reduction test is related to salaries and wages. So as I mentioned before, for people making over $100,000 or less than $100,000, and that $100,000 is really, if for people that had wages during 2019, if any of those pay periods, if you annualized them for a year, if it ended up being over 100,000, they're really supposed to be excluded. Based on what we know now, those wages are to be excluded from this. Those employees are to be excluded from this test. So it's anyone that didn't have an amount during any pay period on an annualized basis that was making less than 100,000. So once you determine who they are, then you're going to compare those. You're going to compare those costs to what was incurred last year for those same employees during the first full quarter of 2020, and during the covered period. And if it's less than 25%, then you get a dollar for dollar reduction to your loan forgiveness amount. So there's some complicated calculations that are going to be taking place. Obviously, your accountants, your controllers, your bookkeepers, CFOs are going to have to be heavily involved with trying to determine what accounts and what doesn't, and what can we get forgiven. For those tests that I mentioned, the full-time equivalence test and the salaries reductions test, there's the act mentioned that if by June 30 you reduce the reduction in full-time equivalents, or you reduce the reduction in salaries and wages for those specific employees, that there would be relief. So still waiting on final guidance on that, but in theory, the thought process is if you had from February 15th to April 29th, or April 30th, if you had laid off employees during that time, and then you brought them back before June 30th, that full-time equivalence test that I talked about before may not apply, and you wouldn't have to apply that reduction to the loan forgiveness. We'll see if that ends up being in the final guidelines, but that is what was stated in the act. Same thing for the reduction in salaries. If you were able to restore the wages by June 30th versus what was incurred from that window, February 15th to April 30th, you'd be able to get relief from that regulation as well. So from a planning perspective, cash flow management, financial modeling, projecting your costs, I think that's key. You should be, if you received a loan already, projecting your expected payroll cost, projecting your other allowed non-payroll cost, just to see where are we thinking the loan forgiveness may be. You can start determining your full-time equivalence hurdle, looking at those periods that I mentioned before, from 2019 or the beginning part of 2020, and figuring out which one has a lower FT hurdle, and that's the one you're going to use when you get through the final covered period. Same way with projecting your full-time equivalents in the covered period. You're gonna, you can kind of project, now that we're going back to work, you have a general sense of what jobs are going to be that we're going to be back on, and therefore we can start to project how many employees are we going to have, and how much are we going to be able to utilize the whole amount for forgiveness. And then tracking costs incurred. Obviously, that's a key component. So some companies I know, as they receive the loans, are setting up separate bank accounts if they can actually set up a separate bank account while the banks are sort of shut down, and you have to do it through drive-through or whatever. So if you can set up as a separate account, a lot of companies are doing that just so they can trace the movement of the money for payroll or for other allowable non-payroll costs. So that's one method. Some may not be doing that because they think they have enough records and controls that they're just going to keep track of it and keep the schedules that they need. And then once you're through the covered 8-week period and you have your number, then you got to make a determination of, okay, here's how much we think we qualify for forgiveness. What do you do with the rest? Do you pay it back immediately? Do you just let it convert? Let the 6. Obviously these loans they have a 6-month window where there's no interest in payment required. It's deferred till those 6 months. So are you going to keep it, or are you going to pay it back? And so that's a determination you're going to have to make. So that's a quick overview of there's a lot of nuances with the payroll protection program, but that's a quick refresher on the forgiveness components. And then moving on to the employee retention credit. So for companies that don't qualify for the PPP or choose not to apply because they don't think they qualify, or maybe they there's other reasons that they decided not to. Maybe it made more sense not to. This employee retention credit program is also available to them. So what is it? So it's really available to any employer that had a trade or business during 2020 that has been impacted by a shutdown or a partial shutdown. So that's one of the requirements. And the other requirement, or another requirement, it doesn't have to be both, it can be one or the other, is that it's an employer that has suffered a significant decline in receipts. So if their receipts for a quarter have decreased by more than 50% year over year, so if you looked at your prior year at the same quarter, if they reduced over 50%, that would also qualify. So companies that maybe weren't shut down, but their business has still been impacted, could qualify for this credit. If you do qualify for the credit, then, and I should say, like this, if you went after a payroll protection program loan, this program is not available to you. It's only available to those that didn't go after those loans. So if you do qualify, an employer that has less than 100 average full-time employees, the credit is based on all their wages for their employees, so including health and benefits and paid leave and that type of stuff. So what you get is you get a 50% credit up to 10,000 in wages. So that means the max credit per employee could be $5,000. And then if you have over 100 full-time employees in 2019, then the credit is only limited to those employees that were impacted by the shutdown. So if you had if 10% of your workforce was laid off, or not laid off, but if they weren't able to do their job because they weren't able to get to the office or able to get to their job, then that 10%, you could apply that 50% credit on those people to get a credit on those. So, as I mentioned before, it's limited to wages are limited to 10,000 per employee, so you can get 5,000 per employee. And to receive the credit, it's going to be really in your payroll tax filing applications. You're going to be able to put the credit in there, and if it's greater than the employer payroll taxes withheld, then it's going to be the excess is going to be refunded to you. In anticipation, the Treasury is allowing for you to be able to use the employee portion of payroll taxes in addition to the employer payroll portion of taxes to sort of offset the cost immediately, and then any excess is going to be supposedly is going to be refunded to you. The other program that I wanted to point out is the employee payroll tax deferral. So this is really available to everyone. So even those that applied for payroll protection program loan, as well as those doing the employee retention credit, can defer the employer payroll taxes till the end of 2020. So for any payroll taxes from March 27th, federal payroll taxes from March 27th to December 31st, 2020, you can defer paying those. So basically it's 6.2% of of a FICA weight, that you usually pay for FICA taxes, that you're going to be able to defer till the end of the year, and then you'll repay it throughout 2021 and 2022. So that is an option for those looking for some additional cash flow to use. The only thing I want to point out from being able to use that program is once you apply for loan forgiveness from the payroll protection program, that you no longer can defer. So that is one stipulation, that if you received a loan and then you did qualify for forgiveness and received forgiveness, you can no longer defer the employer portion of the taxes going forward. So there is some planning opportunities there for companies that do decide to do this program, where they may want to delay their forgiveness for as long as possible, as long as it's within the guidance for forgiveness, and then to max out the deferral just for cash flow purposes. And then finally, just quickly, I won't spend, I went over my time anyway. As I mentioned before, in this unprecedented time, all the costs that we're incurring on jobs that are increasing. We have shutdowns, restarts, personal protection equipment, additional equipment to keep social distancing, potential overtime to get jobs back on track. So there's a lot of additional costs that we're probably incurring on our jobs. We got to keep track of those now as we're incurring them, so that we have an opportunity to recover them, and hopefully we'll have the opportunity to recover them. Obviously, everyone's hurting, but it's stuff that you definitely want to track them to give you a chance to recover some of them down the line when we're through some of these hard times. So at this point, I'll turn it back to you, Joe.
Great, Mark. Thank you. And I will say that we'll get to the Q&A section, but you probably have the most coming at you in that section. But thank you very much for the overview. And I think coming in a close second on some of the Q&A that I'm seeing, or the Q's coming in, would go to Jonathan, because there's probably some concern there on what are we legally obligated to do as we come back from this crisis. So with that, I'll introduce John Landesman, who is our chapter attorney with Cohen Seglias, and he will go over some of the labor and employment issues that we're probably going to face as we move forward. So, Jonathan.
Thank you, Joe. Thanks very much. So the contractors that I represent, that I'm talking to day in and day out, are excited to get back to work, and I'm seeing the same questions pop up repeatedly. And so I thought that I would first sort of go through some of those more common questions that are probably on everybody's mind. So one question that is often asked is, well, I have a group of people. They either work in the office or they're normally working out in the field, and I had to lay them off. And now in the very near future, I want to start calling them back, either all at once or gradually. And the people are receiving unemployment compensation. And of course, we know that it's not just the regular unemployment comp benefit, which maxes out at the state level typically at $570 a week, but they're getting the additional $600 on top of that. So they're pretty content to be home and collecting that money, and they're safe. When I recall them and they don't want to come back to work, what do I do? Can the people just stay home and continue to collect their larger than usual unemployment compensation, or can I do something to compel them to come back to work? And the answer to the question is that if you have work that you're making available and you're recalling these people to work, unless they have an illness themselves, or they're caring for someone in their household who has an illness, Or if there's another qualifying reason, it would be if they have a child who is at home because their school or daycare center is closed down. Absent those reasons, if the person says, I'm not coming back to work simply because they want to continue receiving the unemployment, or they're just afraid, and nobody can discount that now. I mean, there's a lot of fear out there and it's legitimate. What do we do in that situation? We have a right as the employer to draw a line in the sand and say, no, we're making work available for you. We're taking all these measures to make the workplace and the job sites as safe as we possibly can. And if you don't come back to work, that's effectively voluntarily quitting or voluntarily resigning your employment. And we're going to need to report that honestly to the Department of Labor and Industry Bureau of Unemployment Compensation in connection with your claim for benefits. We would hope that in every one of those instances that the unemployment compensation authorities would look at that and would determine that the individual is ineligible for benefits and they'd stop getting benefits. And that would be the correct application of the law. But as contractors know, and I can see Tammi is nodding along, we know from experience that the unemployment compensation people don't always follow the letter of the law, and they typically err on the side of just granting benefits even when they're not wanted. But that's the option that we have that we can take. I guess the other option, and I do have contractors that are doing this, they're saying, okay, if the person is afraid, if they're scared, I'll just tell them, that they don't have to come back, or essentially lay them off and allow them to continue collecting unemployment compensation benefits. And, that is sort of the humane or sympathetic way to proceed. In some instances, of course, a lot of contractors are saying, no, I can't do that because, my GCs are telling me that the projects are open and I've got to go back to work. So that's probably one of the most typical questions that I get. Another question that I get is, okay, I'm having the people come back to work. What can I do? Or what do I need to be doing as far as getting ready and making things safe and establishing the best procedures and practices that I can to, to make sure that I'm A, protecting my people, at the same time, B, protecting myself and my company from exposure to liability. And Hoyt is going to speak in a minute and get into some of the details on that issue. So I won't try to steal your thunder, Hoyt, but I would just note that having procedures that are in writing and distributing them to the people, just like all policies. When we have workplace policies and rules, we want to make sure people follow them. Reducing them to writing is important. So, if we're going to be talking to people about social distancing, hand washing, using sanitizers, coughing etiquette, not shaking hands, all of these sorts of things, we want to put them in writing. It doesn't have to be something that is a really long policy. It can be something with just a list of bullet points, but that's going to help the company and, frankly, its counsel if there are claims in the future, either workers' compensation claims or claims brought by others on a job site alleging some sort of negligence relating to contracting COVID-19. There's also requirements now, again, we're going to talk about them in more detail, about designating someone to be the safety officer with respect to the pandemic, and who should you choose for that role. And again, all of these things should be reduced to writing. And so what's the liability issue if people file, let's say, a workers' compensation claim? Obviously, we know employees can't sue you in just a regular lawsuit, sue you in tort. They have to resort to a workers' compensation remedy. Well, The Department of Labor and Industry has issued some guidance on that issue. We haven't really seen claims yet, so we don't know exactly how this is going to all unfold. But the Department of Labor has issued this guidance that essentially says that proving that a COVID-19 case is related to work is going to be a high burden, which is what we typically expect, because there are two different types of workers' comp claims. There are the occupational injury cases where someone suffers an injury on the job, and then occupational disease cases. The disease cases are typically much more difficult for the claimants to establish causation. In other words, to establish a link between the disease and the workplace. That being said, there is a move afoot in some neighboring states that would sort of turn that upside down and create new presumptions. For example, there was a piece of legislation that was introduced in New York that said that for the construction industry, construction workers who come down with COVID-19, there would be a presumption that it was work-related, essentially, making all of those workers' comp claimants in New York have a very easy time of establishing their right to workers' compensation benefits. That legislation in New York hasn't really gone anywhere as far as being enacted, but if it passes there, we've seen, one thing I've seen is that when there's a step taken by a governor or a state legislature, it seems to start a domino effect, and a lot of other states fall in line and follow. So we'll keep our eye on that very carefully. But right now, I think the general rule is that COVID-19 workers' comp cases are going to be difficult to establish. So we talked about recalling people. We talked about workers' comp. And I know that we want to leave a lot of time for questions, but I have just a couple of other quick points with respect to unemployment compensation benefits. So there's been a lot of questions as far as when are people eligible for unemployment compensation, and how does the CARES Act supplementary payment of $600 per week attach, when are the people eligible for it? And essentially, they're eligible for it whenever there is an unemployment compensation claim that relates in any way to coronavirus, and that additional $600 per week is going to be made available currently through the end of July. It remains to be seen. Again, we're waiting for the folks in Washington to see if they're going to extend that and make that $600 supplement available for the balance of the year or for any time after July 31 of this year. The other rules that I'm getting a lot of questions about, and what contractors are thinking about, are the new paid sick leave and paid family leave rules under the Families First Coronavirus Response Act, also known as the FFCRA. And so for those of you who haven't heard, I don't want to go into all the details, but in a nutshell, FFCRA provides people, employees, with up to 2 weeks of paid sick leave, and for all but the most highly compensated employees, that's going to be at full pay, and that's available to people if they are sick themselves or if they've been quarantined either by a physician or a local, federal, or state government entity. And then there's an additional family leave provision that provides paid family leave that's equal to 2/3 of the person's pay, capped at $200 a day, so essentially $1,000 a week for 12 weeks. And that's available to people who need to stay home to care for a child whose school or daycare is closed due to the coronavirus. A question, and I know Mark gave an excellent overview of PPP and PPP uses. One question that I've frequently gotten is the interplay between FFCRA and PPP. Can I use the PPP to pay for this paid sick and family leave? And the answer is no, because you can't double dip. You're using the money for the FFCRA, and then you're getting a credit on your payroll taxes when you file the 940s and 941s, the payroll tax return. You're getting a credit, and so we can't take the credit and which essentially is Uncle Sam's way of reimbursing us, and use the PPP funds to do that. I guess the other thing, as long as I'm talking about PPPs, and I don't want to spend too much time on it because I know Mark, as I said, already gave a really thorough summary of it. But one question, and is the criticism that we've heard politically. There was a senator in Wisconsin, and there's been a lot of commentators and editorials in the news about how these funds were distributed and if they're going to change the rules retroactively. And again, as Mark said, he's not giving official opinions. I guess this is my personal opinion, having followed this very, very carefully. No one can predict for sure what's going to happen in Washington. It's my opinion, having followed this very, very carefully since day one, that if there are changes in the rules, or if there are rules that require, that change the rules with respect to forgiveness, I don't think that the typical ABC member is going to have a concern or be affected by those changes. I think that those changes are focused really at publicly traded companies, Shake Shack, Ruth's Chris, Potbelly, the sandwich chain, where they have a larger organization that has access to capital markets and is publicly traded, and yet they have subsidiaries or other affiliated companies that were less than 500 employees and got the PPP funds. I think that's what is upsetting the folks in Washington, not so much a closely held business, that is performing construction. I don't think that's their target. So I would not overreact to that. I say that, and then tomorrow we get guidance from the SBA that says exactly the opposite. But honestly, I don't think that that's the concern here. I think it's really the publicly traded companies that have something to worry about in that regard, not so much our chapter members, knowing what I do about the composition of our members. So with that, Joe, I guess I'll send it back to you, and we can continue forward.
Fantastic, John. Thank you. Before we get into the next portion of our presentation, and before we go to Q&A, there's one thing I want to say about safety. We didn't lead off with safety because we really wanted safety to be one of the last things we presented. So it's fresh for Q&A. So something that we're deeply committed to, not only from ABC National, but also at the chapter. Regardless of this disease, this is part of the culture. And one thing that, we've been promoting as we go back, everybody wanted to go back to work. They wanted to go back quickly, but we said, you can't go back to work unless we can do it safely and quickly. And that's why we lean on members like Med-Tex and Tammi, who's also our chair, but is also deeply rooted in safety with her background. We wanted to make sure that they both have an opportunity to present to you. We have endless resources. For those who have been following my LinkedIn or the chapter's website, almost from the day that this hit, we were putting out live updates. Our website was instantly updated. We continue to do that. So we do want to be your source as a member to come visit the website, pick up the phone, email info@abceastpa.org if you have any questions. And before I hand it off, the one thing I want to say to all the members on the webinar today, if you haven't filled out your STEP application, please fill it out and send it in. So I'd be remiss if I was introducing the next two folks on the webinar if I didn't say that first. So that's out of the way. And I do see more questions coming in, so I expect a nice Q&A session here at the end. Hoyt and Tammi, I will hand it off to you.
Tammi, I think you wanted to take the lead on first, right?
You want me to? Sure.
That's good.
So I'm actually just going to focus on OSHA guidelines, regulations, memorandums, recommendations, and just clarify some confusion out there. So I am going to show my screen here in a minute. Hopefully that worked. If one of the other presenters could nod their head, great. So first I want to just point out that I've gotten a lot of questions, whether they be during interviews or from other members, about whether or not OSHA was going to come out with a COVID standard or regulation. And the answer to that is no. There is not going to be a new law, a new regulation. What OSHA essentially put out was that they did put out guidance. So there is a document that is called Preparing the Workplace for COVID-19. However, that is guidance and not a standard. It is not a regulation. It creates no new legal obligations. It is literally just a document containing recommendations and descriptions of the already mandatory health and safety standards that actually apply. So what I wanted to take a few minutes to do and share the screen is that if you go to OSHA's website, they do have a COVID-19 section. And it begins with what you see here, which is the standards that actually are affected. In other words, these are the standards and the laws that we're already required to comply with, that OSHA is just basically saying, hey, these are the ones that you need to worry about with regard to preparing your workplace for COVID. And also, by the way, there are some standards that you might actually have a difficult time complying with as the result of COVID. And what I'm going to focus on right now is those 7 enforcement memorandas that were released starting about the very beginning of March, I believe around March 13th or so. So in this section, there are 7 memorandums that are essentially enforcement discretion memorandums for the compliance officers. And those are things that are very important to us as we get back to work here. And they deal with things like the fit testing for N95 masks, which are required in the construction industry for some work tasks. And there's a process that you have to follow when you require the wearing of masks for your employees. Right now, due to not only the shortage of masks, but also the shortage of the supplies that are required to do fit tests, there is interim guidance for OSHA on how employers can in fact comply. One of the most important documents I would recommend that you read is actually a document that is geared towards the enforcement officers, which tells them what the plan is. So it's the interim enforcement response plan for the coronavirus disease. And it actually outlines how the OSHA compliance officers are going to handle essentially workplace incidents that are reported right now during this in accordance with keeping their employees safe as well. So this is an important document for you to read because it's actually telling the compliance officers how they are to proceed with enforcing the current OSHA standards. And it touches on literally the standards that the employers will have difficulty complying with and what the expectation is going to be when that investigation does take place, what the enforcement officer will have to be looking for to prove that the employer did in fact the best job that they could trying to comply. So they've essentially in some of these memorandums conceded that, you know what, there's a standard that exists that the employer really is going to have a difficult time complying. The most popular is being able to provide everyone a face mask, which is why in the interim guidance, they're allowing people to bring things from home, where typically in a work environment, the employer absolutely must provide in this particular one, they're making some interim and saying, but employees can also bring from home their mask and wear their homemade masks. So there are 7. One of them is specifically for the healthcare with regard to the annual fit testing. After that, we have enforcement guidance for respiratory protection due to the N95 shortage. And in there, it makes recommendations for employers on how they can continue to comply, right down to basically recommending that you find another way to do the task that would not require you to wear an N95. So they've asked us to reevaluate our tasks and try not to have to use them. And that would be in an effort to assist in pushing those supplies to the healthcare. The enforcement guidance for use of respiratory protection equipment. Again, something important. These things are all, whoop, that shouldn't have happened. These things are all affected, directly impacted the ability of the employer to do so. There's expanded temporary enforcement guidance on the respiratory protection fit testing. Again, the other is the enforcement guidance on the decontamination of those N95 respirators, because while typically we have to throw them away, again, right now they are allowing reuse if you follow these guidelines, which requires inspecting it and some other details in there as well. So again, they have not created a new law or a new regulation. What they have done is highlighted the already existing standards that an employer has to comply with and how those standards may be impacted, and then what the employer must do in order to continue attempts to comply, even in an environment where it may literally be impossible. So these are pretty important documents for those of you who are going to reopen your workplaces to make sure your safety people are familiar with. One of the components that Hoyt is going to talk about is the requirements for all construction activities. And there is a requirement for pandemic safety officers, and right down to what they need to be able to know and communicate in that role on the job sites. These would be probably important memorandums that you'd want to have them familiar with. And then again, enforcement discretion memorandums, basically saying, one, specifically addressing the record keeping injuries and illness requirement with regard to COVID-19, and from an OSHA perspective, what they would require for you to actually have to put that on your OSHA 300 forms. And that is very specific memorandum. Again, you definitely want to pay attention to. And it was released on April 10th. And it will actually require, like, when you read the memorandum, OSHA will be looking for absolute proof that that the contamination happened at work, because they are looking at this as a community health issue. So one of the things that I've really stressed in training people about the COVID-19 workplace hazard is that it's unique. Normally, we are looking at hazards and thinking of them as something outside. It's either a material that we've brought in, or it's a piece of equipment, or it's the task itself, such as working from heights. Under the COVID-19 scenario, the hazard is the human, because the hazard is actually contained inside the human body. So when we're looking at the controls needed to put in place for this hazard, it's really unlike anything else, because the person and the people, every single one, is essentially the hazard that we're looking at to isolate and protect from in the workplace. So with that, I'm going to hand it over to Hoyt and let him run with the specifics of job site safety.
Tammy, thank you for an excellent, excellent job of describing the federal OSHA perspective on it. And as you know, there's federal OSHA and there's state OSHA, and we always are concerned with what we call the authority having jurisdiction. In Pennsylvania, the state, the governor has powers, and sometimes more powers than the federal government does. Within the counties, there's more powers. Montgomery County was one of the first hotspots. So it was an example of how Montgomery County put in special precautions as well. Particularly in what's really new, and it's really as of the 23rd, so it's basically within the last 5 days, is the governor put out a guidance, construction industry guidance. Again, the word guidance is kind of a catch-22 because although it's guidance, they're really expecting you to do your best to meet these requirements. And in reverse chronological order, I want to bring something up that Tammi said. The first time I've seen, they call this, again, identify, I'm going to read this, one of the few things I'm going to read, identify a pandemic safety officer. All these are out there if you do a search on the governor's construction industry guidance PDF. The identification of a pandemic safety officer. They're specifically saying that this hazard is so unique and the conditions are so changing. And as Tammi said, it's different. We're bringing in, as we're our own vectors in a way, bringing in the hazard, the disease, the infection, that the pandemic safety officer has to be available on site and has to be specifically responsible for conveying, implementing, and enforcing social distancing and other requirements of the guide for the protection of employees, suppliers, and other personnel on site. So I was talking to a client this morning and he said, oh, that pandemic safety officer is the enforcer. And I said, no, he's the reinforcer. He's not the enforcer, he's a reinforcer because all these practices should be in place in different levels already. So just running down them quickly, of course, we want to have screening. If you look at the nuances, sometimes levels of screening are defined by if there was someone potentially infected or not, but all sites should have screening. We should all be self-screening, self-monitoring ourselves and being honest, not to come to work if we don't feel well, not to come to work if we're in close contact. And that basically means within 6 feet without protection for longer than 20 minutes with someone in your household who may be showing symptoms or diagnosed or has the virus, has the COVID-19. We don't want to come to work and potentially spread it. It's a big cultural change. It was, most construction workers want to work through their pain. This is a huge difference. So number one, screening, self-screening, screening at the site. And originally, 2 months ago already or such, they said, what are the 3 questions the CDC is asking? If you look on the CDC site, Centers for Disease Control, you'll see that it's hard to find just 3 questions, but what they really are asking is 3 things. How do you feel today? Have you been around or do you have any of the symptoms for the past 2 to 14 days? And they have a list of symptoms, and these just changed in the last week. They added chills to it, for example, if you have repeated chills. The virus is manifesting itself in different ways in different people, depending on their vulnerability and their personal body's reaction to the infection. So once you pass all those questions as to, yes, I'm okay, then the final screening question, and this is not a foolproof one, is to take the temperature. Easy said, not always easy done, because depending on the ambient temperatures outside with construction sites, depending on the situations, depending on if the person is cold from walking from the car, their surface, their temporal skin might be cold. The thermometer might be not working within the range of its design. So it's very critical that you have monitored the temperature and recognize that the temperature itself, a fever, is only present maybe 25%, give or take 10% of the people who have the COVID virus. So all these things, people say, well, then why bother? Why bother screening when so many people can be asymptomatic? And the answer is to remind our people, to remind each other of these conditions so we're conscious of it. It's just like why we have a safety talk in the beginning of the day, why we do toolbox talks. The screening is the same thing to emphasize all those points and to get everyone to agree, hey, we're looking out for each other. Absolutely, absolutely critical. Next biggest thing, and again, 6 weeks ago this wasn't the case, is wearing a mask, a face covering, okay? This could be a little surgical mask. It could be a shirt sleeve. If you see me on other webinars, I wear my shirt sleeve, I cut it off and wear it. And what the mask does, the mask isn't PPE. It's not personal protective equipment. It's actually, when we do infection control trainings in hospitals, we call it patient protective apparel. We're protecting each other from each other by wearing that face covering. It's protecting us from accidental expressions and jettisoning of saliva and spit as we're talking. It would contain a cough in a sanitary way, not comfortable, but it would contain a sneeze. That face covering is really, really important, and it's the courtesy we have to each other. So face coverings are required. Now you say, well, wait, what about eating and drinking? Well, when you can't wear a face cover because, of course, you need to eat or drink, then you have to maintain social distancing, at least 6 feet. So this requires an entire change in how we gather in the workplace, how we even assemble for work. We're going to have staggered starts so we're not in line too much. And once you're in line, have your 6 feet distancing. Don't do the same lunch breaks where everyone's gathered around. Even concerns about elevators. How big is the elevator? Who's on it? Can you take the steps? The physical distancing is so critical to us making sure, in addition to the face mask, in addition to the hygiene, to the washing of hands, which is required, in addition to the when was the last time, ask yourself this, when was the last time you shook someone's hand? It's probably mid-March or so. Okay, we've made these cultural changes, and that's what I wanted to acknowledge about what Joe said. He said we're making cultural changes. We have resources. And in a way, in some cases, we have too many resources. There are now hundreds and hundreds of documents, and they're sometimes very confusing. Please, with all of these, contact myself, contact Tammi, contact Eastern ABC. We want to listen for the intent and what the rules are trying to be. So again, we talk about screening, we talk about CDC guidelines, we talk about social distancing, we talk about hand washing. No more gatherings more than 10 people. Now, that's an interesting rule, and it's been misinterpreted a few times already. And basically, it says, it has to do with the density within a building. I'll read this to you. It says, commercial construction projects, including new construction, renovations, and repair, are authorized to conduct in-person operations, not remote. However, enclosed projects or portions of enclosed projects may not permit more than 4 persons on job sites of 2,000 square feet or less. So this doesn't mean everyone has to be 500 square feet apart. It's just an attempt by the government to say, by Pennsylvania to say, we don't want to overpopulate the building to resist the inadvertent gathering of people. It also excludes people who are traveling through, passing through, inspectors or compliance people, people visiting part-time to go through as part of their job. That's not considered a worker, which would fall under that density rule. So again, that density rule is in here. Make sure you understand the intent of it, and not that you need 500 square feet around us for working. Cleaning and sanitizing protocols. We've all been doing this. We do it ourselves. The general contractors and other organizations within the construction site are having people paid to clean those common touch points and to do more extensive cleanings as necessary. When would a more extensive cleaning be necessary? If we discovered somebody was on site and they were diagnosed with the COVID virus, we want to do a deeper, more extensive cleaning of the areas that person was working in. That would require a more extensive training. Now I'm going to point something out, which you'll see also, and then some of these are confusing. There's a guideline that says wait 24 hours before you clean. It's a peculiar statement, wait 24 hours. What the intent there is that you allow all aerosolized or droplets to settle for the safety of the people cleaning, but also so that you can get everything off the surface. The downside to that is you want to clean as soon as possible. We're always cleaning as soon as possible because of touch points and other things. Droplets fall very quickly. A droplet is a drop, it will fall by gravity. An aerosol is maybe tiny particles which take maybe hours, depending on the ventilation, to drop to the surface. But depending on the risk factor here, it's all about a risk assessment, is maybe you clean immediately, making sure that people who are cleaning are protected, which they will be, they're wearing masks and gloves, and then maybe you clean again. This is the kind of complication which we need to consider and think about with a team like on this panel. How do we comply with this guidance? What's applicable? How do we make it make sense to all of our workers, our employees? How do we make them be safe? So again, going down the list of things, staggering your shifts, your breaks, your time on and off, limiting the sharing of tools. Whenever possible, don't have tools. Even Tammi talked about OSHA guidance. We no longer have to have employees sign in for a training roster. The instructor can verify that an employee was there because they don't want people sharing the papers and the pens. They want to minimize those common contact points. So again, unnecessary visitors, limit deliveries. If you're going to have someone come on site, that delivery person should be screened as well. It can happen that they become a source of infection potentially. And limit access to enclosed spaces, if you can work outside, if you can increase the ventilation, these are all really important. So let me just say a couple things in conclusion. I want to open up to the members and other people. And Tammy, please, if I miss something. There are, as I said, now hundreds and hundreds of pages of documents. And part of the challenge with that is that we keep learning more and more about how this disease is impacting our immune system, how it's making certain people more vulnerable to others. All this is important for us protecting the people we love, the people we care for, the people who are more vulnerable, more susceptible, our elderly relatives, our friends who may have an underlying condition. We want to do what we can to protect them. In theory, a foundation of industrial hygiene is that if you're healthy enough to work, you're healthy enough to fight off most normal type of environmental health conditions. Okay, we live, we breathe, we're healthy to work. We're still trying to figure out this COVID virus. We're still trying to figure out how it affects us. Therefore, we want to do everything we can without being fearful, without being irrational about it, but everything we can to follow these guidelines to ensure safety, to get people back to work every day as we start to re-energize the economy, as David and Mark were saying, as well as John. So Joe, Tammy, anything I might have missed on that, or things you want more clarification on before we turn it out over to other people?
No, I think you covered everything really well. Just one thing is there is a handout attached to the presentation. That handout does include the most recent OSHA alert that is labeled COVID-19 guidance for the construction workforce. We've attached it for you in both English and Spanish. We also have provided to you a wage and hour division. It's essentially their resource list where they updated it on April 21st with links to all of the most recent guidance from Centers for Disease Control and some of the other organizations, and NIOSH, ANSI, all of them. And they've actually organized those links even by industry sector. So both are documents that will help you in preparing to get yourself back up and operational in the next few weeks here.
Great.
Thanks, Tammy.
Great, Hoyt. Thank you, Tammy. Thank you. We do have some questions coming in, so we're going to start. I'm going to kind of go in reverse order when they came in. Going back to either Hoyt or Tammy, what is the fever temperature when checking? Are we going with 98.6 or 100.4? I guess Hoyt or Tammy can handle that one.
I'll just jump in there. Again, CDC says 100.4, but 0.4 of a degree of temperature can be a very minuscule amount. My original guidance was saying over 100, we want to alert the site to do further evaluations. It is a screening, it's not exact. People may have different skin temperatures based on whether they came from the cold weather or not. So technically it's 100.4. Many guides are 100. If you're going to CHOP, for example, Children's Hospital, they may say 99. So oftentimes we have to defer. Again, this goes right back to, I think, what Joe was saying, as well as some others. Every site has to have a plan. The plan is required. It's writing it down, it's being disciplined to it, it's being cognizant of it, and keeping up with it. So again, what is the exact temperature? Ask your site based on the plan, based on the risk.
Okay. I guess we probably a couple folks could address this one. So this is coming with regard to residential construction. Maybe David, I could throw this your way because you might have a few clients that do this. That can begin, construction begin on May 1st. I know we have some regional concerns, but have you heard anything on the sale of when new homes could be sold? And of course, I think that refers to having open houses or things of the like. So I guess that's kind of a safety and economy question. So throw it out to the whole group.
Yeah, I have not heard any guidance on that.
Yeah. Let me just jump in. Actually, the governor's provisions does talk about residential construction, and for residential construction, new construction, renovations, repair, they're basically saying 4 people for the site, period. So again, that's something to think about. Now, it would be inside, under roof, in the active construction areas. So you could have more than 4 people if you had some people working outside. But again, consider the nuances of these regulations, because I know, especially in Philadelphia, license and inspections people, they care, and they're going to be looking out, and they're going to be looking for things being posted. They're going to be looking for compliance. They're going to be looking for that pandemic safety officer. So be ready.
Which leads into another question. So this is coming from one of our developer members or developer participants. They're building, this particular person is building a site that has 98 different locations. It's a home site. So that would apply to, if I hear you correctly, Hoyt, that you could have 4 people in one home project, 4 people in another, 4 people in another. Is that correct assumption?
Yeah, the way it's written is basically under roof, and it's the area being constructed. So absolutely, if you had multiple sites, each one would count as an independent unit.
I think the rule that I saw was 4 people in an area that has 2,000 square feet, 1 additional person for every 500 square feet.
Right.
For construction.
Yeah, but residential, they don't give you that additional. They just say 4 people for residential, but each home would be considered in. So again, like Jonathan's saying, these are all sort of interwoven.
Right. I think the crux of the question was that each home project is its own site in the midst of 98 other sites. So there's 98. Got it. That's good. That's good. I think that answers that question. Moving on then, I think, Mark, this comes your way. If you receive the PPP funds midweek, does the calculation period for the average FTE begin the following work week?
Yeah, I mean that the guidance that we know as far as the act, it said the average full-time equivalents per month, and then the sort of the guidance from the SBA was it's really per pay period. So you're really only going to know that once your payroll is done for that week. So my expectation would be that it will be based on those pay periods that fall within that 8-week period. As far as the FTEs for the covered period, and then for FTEs for the remainder of the year, it will just be the pay periods within those time slots when they're paid, because that's the records that you have to support the calculation.
Good. I think another follow-up question that came in then, the fees paid to an outside payroll company, do they count towards payroll costs for PPP services or purposes?
I don't think there's guidance out there on that. I would say fees for payroll may not. It's really meant for compensation paid to the employee itself, and that could even be just a car allowance. If you pay employees a car allowance, that would count. But as far as fees to an outside service provider, I think that's probably a little out. My opinion is it's outside of the covered cost for that type of situation.
If I could chime in too, I think another consideration, a lot of organizations make retirement plan contributions at the end of the year, or like if they offer a safe harbor 3% company contribution, a lot of companies make that at the end of the year, or they might make a profit sharing contribution for the year. It's definitely something to consider. Review your plan document, make sure you're complying with your plan document, but it could be a good time to make that contribution during that 8-week period so that the contribution qualifies. And Mark, I'll defer to you on that, but that's certainly something that we've been looking at with a lot of clients.
Yeah, I would reiterate that. I mean, right now it's saying costs incurred and paid. We don't know what the final regulation will be on that, but when you borrowed the funds, you were including those retirement plan contributions in your calculation. So we think it's reasonable, maybe not the full amount, but if it's like ratable on our opinion is if it's ratable based on the time incurred, if you made a contribution, that could count. Plus, it's possible that even ones that you haven't made for 2019, maybe we're delaying them, and now with COVID you delayed them some more. If you pay those retirement contributions now in the covered period, do they count? There's nothing that we don't officially know the rules yet, but that is something to consider if that will count, and we'll wait for final guidance when that comes out.
Great. I think going towards Philadelphia. So Hoyt, maybe possibly you, could be anybody on the panel. I could answer this one, but I'm going to defer it to y'all. The state has authorized May 1st for construction. Has the city of Philadelphia acknowledged this as well? Anybody who would like to tackle
that? Back to you, Joe, because I don't know the current state. I don't.
No problem. Philadelphia is, in quotes, doing their own thing. So we're closely monitoring what Philadelphia is doing. The thing that I will defer to, Dr. Levine, Governor Wolf put out the May 1st, target date. The thing that I'm also monitoring, though, is this regional map and the number of cases, looking at the population in general. Philadelphia and Montgomery counties were hotspots. So those are being monitored closely. So from the May 1st, that has been put out there. But I would say that, we probably need to watch that till the end of the week to see if that's going to be a reality. And there'll be more to come on that. Anybody else have anything to add on that one? All right, we'll move on to the next question. Let's see, if you get 500 per square feet when residential is a 4-story construction or above, 3 stories and less is for a 4 unit. I think that's just a square footage question about how many folks you can have. Again, you have that 2,000 square foot restriction or qualification, and then you can add from there. So I think we answered that in a previous question. And has anyone put a percentage to account for labor effort to increase to meet the COVID-19 requirements? Very general question, I guess, to anyone on the panel.
If there's an acknowledgement, it's more expensive. Everything's more expensive, but I haven't seen a quantitative capturing of that.
Okay. And I think this was tied to the Philadelphia question, but another question came in about the project in Montgomery Township, that may be county. Can you schedule for a May 4th start? Can schedule for a May 4th start, but again, I would ask you to go to our website and look at the materials that were provided today. Make sure you stay within the guidelines, and overall, as Hoyt had mentioned, and Tammi had mentioned, stay safe. I mean, go with the spirit of what the requirements are. I know, being in construction, that some of those are a little daunting because your crew sizes are shrinking. You have to be very cognizant of, some additional, threats that are there with regard to keeping everybody safe. But I would say, yes, you can schedule to be ready. And what we've done here at ABC, and what my kind of mantra has been since we heard about this, this would have been March 10th, 11th, in that week, I said, from a safety perspective, go overkill. Do more than you think you have to do. There's no harm in that. So as you're preparing, I would say keep that in mind. Do more than what it says, wherever it's applicable. So that addresses that. I want to thank Dylan for sending that. Dylan's got a couple questions here. So is there a site we could look at for township by township openings? I believe state of PA actually is outlining all of the counties. We are monitoring that as well, so you can always send a note to info@abceastpa.org if you have any questions. You can call into the office. That's 610-279-6666. If you have any questions, we're happy to address them. If the website seems that it's not giving you the answers that you would like. And does ABC recommend specific industry standard signage that we should post on all sites? Yes, we do. Anything from the CDC, those are the standard. I think, Hoyt, you could probably chime in too, but anything that's been issued by CDC, as long as it's, and it should, be within the state guidelines as well, then all of that I would recommend posting. Go again with my mantra, overkill, overpost. Hoyt, if you have a comment on that?
And just a comment to make sure your postings are still current. So one job site, they had, until so-and-so a date. Of that date had surpassed. If we expect people to follow signs and respect the information, we have to make sure it is current. So make sure it is current. Everything on the CDC guidelines, OSHA has links to them. We have many posters available that can be used.
Fantastic. I just got word too through the chat bar that Mayor Kenny has issued a press release for Philadelphia. Rather than trying to read through that, I'm going to issue that out to the attendees. But long story short, you can get ready to restart. There are obviously major things to consider when you do so. So we'll refer to that along with the guidelines that we presented today. And I know we're a little over 2:30. I'm going to see if any other questions come in before we maybe move to wrap up. So we're, as far as the chat bar, it looks like it's calming down just a bit.
Joe,
Yes, go ahead, Tammy.
did you want to touch on the red, yellow, green phasing of the opening?
Yeah, so, as you know, in the hotspot areas, the red area, the whole state was under red, right? So we were all at home, what they call shelter in place. That was outlined by Dr. Levine as the stay home, stay calm, stay safe. That was red. Now, as we move into the yellow, those restrictions then begin to lighten. And then, of course, you move into green. What Governor Wolf had announced, and I noticed that it was looked to me in the Q&A to be something that was either on his mind or on his mind as he entered into the press conference, that the May 1 opening was a question of, are you still doing this? From what I saw, it wasn't common knowledge that May 1 was common. It was more May 8th or thereafter. So when he said yes, he then issued this overall standing. The reason I mentioned that is what came out was the northern central region of Pennsylvania was already probably in the green zone. There were very limited cases. Also referring to, a statement that Dr. Levine made along with the governor, when you look at Philadelphia and the surrounding counties, they are in the red zone, and now I guess we're moving slightly into the yellow zone. But the statement that was made was the southeast region is the one that is likely to open, in quotes, last. And we see things lightening up, but again, we have to keep a close monitor to move from red to yellow, yellow to green. When you look at the per 100,000 count in each individual county, then you're looking at the number of cases over a 14-day span. So that's what we're going to be looking at. As a general, right now, I could say we're still, what are we, orange? We're red and yellow as we move out. There are some areas of the entire state that are green outside our chapters area, but we're closely monitoring that as we go.
So Joe, that means that if you are in a red area, that only life-sustaining businesses can operate?
That is our understanding, yes.
That's exactly the wording it says. That's until May 8th currently. Again, it's based on how many cases per 100,000 for 14 days.
And can we tell our members where they would be able to find the map that would let them know?
Yes, actually, that's part of the deliverable statement we're going to send out post here. So yes, everybody will have a link to that. And again, we're going to be closely monitoring as a chapter, so we're here as a resource if you have any questions. Great. Well, I think at this point, questions have all come in. I do want to thank everybody on the webinar who's hung in. I know we're a couple minutes over. And a couple just brief closing comments. As I mentioned, that safety pre-COVID-19 part of the culture at ABC, and it's something that our members have always been apt from a safety perspective to be, liquid in what they do. When I say liquid, they're ready to move in any direction that requires a safety update or innovation or anything like that. So we're very proud to be always putting out information to help the members do that. We look to our members to give us a lot of that insight as well. So we appreciate, not only the folks that were on the panel today, but all the members that are giving input in all of our committees. Safety's been the focus for the last, in this situation, heavy on, disease control and that part of safety for this piece. But, as you all know, that's where we focus. We're heavily focused on that now. We haven't lost focus on everything that goes on legislatively, what's happening with membership and everything else that, we're a part of. So, I thank all of you for being extremely optimistic as we've moved through this. It's glad to see that there's some light coming in now at the end of the tunnel. And again, we stand ready to be the resource to any government agency that chooses to reach out to us. Obviously, we're here as a source for all of our members. And I just wanted to close with a thank you. And as we move into the end of the week, this coming Thursday, as I also thanking David, he will be running the Lehigh Valley Council and Northeast Pennsylvania Council for ABC. That's via webinar, live cast 12 to 1 on the 30th. So I thank David for doing that. I look forward to seeing everybody on that one. We have a podcast that's being launched from ABC Eastern called Talking Shop, which I'm going to be hosting. We've already kind of put the intros up for that. There's some things coming out on that. We also have a video show that'll be coming out later this year, which is Constructing Freedom. So I'll be asking, members to come on as guests, legislators, folks in the building industry, and we'll be doing that. So a lot of things happening. This situation has caused us to move very quickly, as maybe some of you have, maybe all of you, to kind of move virtually. It was a part of our strategic plan this year for a lot of our activities, and not exactly the way we planned it, but now we're doing it. So again, appreciate everybody, being on this particular webinar today. We look forward to seeing you soon, hopefully in person. And again, thank you to everybody. So with that, is there any closing comments from the folks on the panel? Looks like we're good. So thanks again. Look forward to seeing you on a webinar shortly. Take care.
Thanks, everybody.
Bye.
Bye.